Imagine this: you wake up one day, and the cost of everything, from your mortgage to your groceries, feels heavier on your wallet. Why? Because the central bank just hiked interest rates again. But what does this really mean for you, for the stock market, and for the economy in 2025? Stay tuned as we unravel the mystery behind interest rate hikes and their true impact on the market. You don't want to miss this. 1. Understanding interest rates. Explanation of what interest rates are and why they matter. The role of central banks in setting interest rates, for example, Federal Reserve, European Central Bank. Why central banks raise rates. Combating inflation, stabilizing the economy, etc. Examples from recent history. Interest rates are like the heartbeat of an economy. They determine how expensive it is to borrow money. Whether it's a business looking for funding or you taking out a mortgage, these rates dictate how much extra you pay back. Central banks set these rates to either stimulate or cool down the economy. 2. How interest rate hikes work. The mechanics of raising rates. How it affects borrowing costs for banks and consumers. Ripple effects on personal loans, mortgages, and credit cards. The connection between interest rates and inflation. When central banks raise rates, borrowing becomes costlier for everyone. This slows down spending and, in turn, lowers inflation. But there's a catch: it also impacts the stock market and other financial sectors. 3. Immediate market reactions. How the stock market reacts to rate hikes, sectors that typically gain and those that lose. Historical examples of market volatility following rate increases. The role of investor psychology and expectations. The stock market tends to react dramatically to rate hikes. Growth stocks often take a hit, while value stocks and dividend-paying companies may gain traction. Understanding these patterns can help you navigate the turbulence. 4. Bonds and fixed income investments. Why bond prices drop when interest rates rise. Opportunities for fixed income investors in a high-rate environment. Strategies to protect investments during rate hikes. As rates rise, bond prices drop. But for savvy investors, this can be an opportunity. Bonds with higher yields become more attractive in a high-rate environment. 5. Impact on real estate. How higher interest rates affect mortgage rates and home affordability. Potential slowdowns in the housing market. Opportunities for buyers and sellers during high-rate periods. Higher interest rates mean higher mortgage costs. This often cools down the housing market, making it tougher for buyers but creating opportunities for those with cash on hand. 6. Effect on businesses. Increased borrowing costs for companies. Implications for growth and expansion. Which industries are more sensitive to rate hikes, for example, tech, real estate? Strategies businesses use to adapt. For businesses, rate hikes increase the cost of borrowing. This forces companies to make tough decisions, delay expansions, cut costs, or innovate to stay competitive. 7. Global implications. How rate hikes in the US or other major economies impact global markets. Effects on emerging markets and currencies. Examples of recent global economic reactions to rate changes. Interest rate hikes in major economies ripple across the globe. Emerging markets, for example, often face capital outflows and currency devaluations as investors seek higher returns elsewhere. And last, 8. What this means for you in 2025. Practical advice for managing personal finances during periods of high interest rates. Investment tips, sectors to watch and avoid. How to prepare for potential rate hikes in the future. So, how can you prepare? Start by reducing high interest debt, diversifying your investments, and keeping an eye on sectors like utilities and consumer staples, which often perform well in high-rate environments. Interest rate hikes may seem daunting, but with the right knowledge and strategies, you can not only survive but thrive. Remember, it's not about predicting the future, it's about being prepared for it. To wrap up, interest rate hikes in 2025 are shaping the economic landscape in significant ways. Understanding their impact on the market and your personal finances is the first step to thriving in this environment. By adopting smart strategies and staying vigilant, you can turn challenges into opportunities. If you found this video helpful, don't forget to like, share, and subscribe to our channel for more insights on navigating today's economic challenges. Let us know in the comments how you're planning to adapt to the changing market conditions. Thanks for watching, and see you next time.